Tron's blockchain now processes over 55% of all USDT transactions daily. That's billions of dollars moving every hour, and it's reshaping crypto. Justin Sun, Tron's founder, has been pushing this network since 2017. His goal? Make Tron the cheapest and fastest settlement layer for stablecoins. By May 2026, Tron hosts about $62 billion in USDT supply, according to Tether's transparency page. That's more than Ethereum and Solana combined. Why Tron? Fees average under 10 cents per transfer, and confirmations take 3 seconds. For remittances and arbitrage, that's a game changer. In March 2026, Justin Sun announced a new Tron upgrade called Odyssey version 5.0 at the Hong Kong Web3 Festival. It promises sharding for higher throughput. The upgrade aims to push Tron past 10,000 transactions per second. For context, Visa averages 1,700. Tron wants to rival traditional finance. But Tron's dominance in USDT also raises centralization concerns. Over 70% of Tron validators are controlled by entities linked to Justin Sun's ecosystem. Critics argue that Tron is less decentralized than Ethereum. In February 2026, a report by The Block noted that Tron's governance is heavily top-down. Despite that, USDT on Tron keeps growing. In Q1 2026, Tether minted $12 billion new USDT on Tron alone, per CoinDesk data from April 2. That minting coincided with a surge in TRX price. TRX hit 28 cents in April 2026, up 40% from January, driven by stablecoin demand and DeFi activity. Tron's DeFi ecosystem, led by JustLend and SunSwap, now holds over $8 billion in total value locked. That's up from $5 billion in early 2025. Justin Sun also made headlines in April 2026 by buying $100 million worth of TRX from the open market. He called it a long-term confidence signal. The buyback came after a brief dip in TRX when the SEC filed a new lawsuit against Binance. Tron's price recovered within 48 hours. Tron's resilience shows how deeply USDT is embedded in emerging markets. In Nigeria and Argentina, Tron USDT is used for savings and cross-border trade. A March 2026 study by Chainalysis found that 60% of all stablecoin transfers in Latin America happen on Tron. Speed and low fees drive adoption. But Tron also faces regulatory heat. In January 2026, the EU's MiCA rules classified Tron as a significant stablecoin network, requiring extra oversight. Justin Sun responded by hiring a former EU regulator as Tron's compliance chief. The move was reported by Cointelegraph on February 10, 2026. Meanwhile, Tron's USDT volume keeps breaking records. On April 15, 2026, the network processed $18 billion in USDT transfers in a single day. That's more than the daily GDP of many small countries. Tron is quietly becoming the backbone of crypto's dollar economy, even if critics complain. Subscribe to Orvayxen for more deep dives into blockchain ecosystems, stablecoins, and the people driving them. Hit that button now. So what's next for Tron? If the Odyssey upgrade delivers, Tron could challenge Solana and BNB chain for DeFi dominance. But centralization remains a risk. Justin Sun also hinted at a Tron-native algorithmic stablecoin, similar to Terra's old UST. He said it would be over-collateralized and audited monthly. No launch date yet, but the crypto community is watching. If Tron pulls it off, it could reshape the stablecoin landscape or repeat past mistakes. What do you think? Is Tron a stablecoin powerhouse or a centralization trap? Drop your take in the comments. Sources: CoinDesk, April 2, 2026, and The Block, February 2026. Thanks for watching. If you found this valuable, subscribe for more deep dives.